Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now.
Well done.
Do you want to, should we go over to Lemonade?
Yeah, we can. They just dropped their press release and their letter to shareholders. So before I pull it up, so what is Lemonade? So we talked about how Upstart is building this AI-driven model for originating loans to expand access to loans to credit in a more affordable way to more people who are left outside of the current credit process, the FICO kind of monolith. Lemonade is trying to do something similar with the insurance business in terms of using AI, and they have multiple AI tools, but they're using AI to drive down costs. They're also changing some things to try to reduce the frictions in the insurance business right now, because the current model for most insurers is you pay a premium, they take all of the premiums, and it's called float, and they invest it and make a small profit or a large profit depending on what they invested in on that float, and then you file claims. And when people file claims, most insurance companies, it's not in their best interest to pay claims quickly, because that's float that they no longer will have to invest, right? So insurance companies typically have very low customer service scores. Like net promoter scores are some of the lowest of any industry in the insurance industry. So what Lemonade's looking to do is to change other things, like using reinsurance for the bulk of its policies to detach itself from those claims, using AI tools to pay claims like potentially in seconds, right? Little things like that they're looking to be able to do, using AI on the back end to drive down cost, to reduce so many of the manual things that insurance companies typically have people doing today. Travis, here's the problem. Lemonade has not been a very good insurance company in terms of making money on the actual price that they get for the policy versus their operations versus claims, right? So they haven't been very good at generating underwriting profit. Let's take a look at the quarter. So this is exactly what they give us every single quarter. So in-force premium, right? So this is up 76%. We continue to see that good. They continue to write more policies every quarter, and they continue to grow their customer base every quarter, up 30%. This is the big one. This is, again, up 76% for that in-force premium. The premium per customer is up 76%. When you grow your customers 30% and your average customer spends 35% more, that's where you get 76% growth in in-force premium. So again, you see, going back to the 2020 quarter, it was less than $200 million. So it's well over tripled in 2 years, Travis. So that's a real positive. Here's where it's not positive. Okay. Gross loss ratio, 94%. Okay. That's not good, right? When here's their goal. Their goal is around 70% gross loss ratio, 70 to 75%, leaving a substantial amount of money left over that can pay for reinsurance, and that it has left over, and that can be, the profit, right? So
are we seeing a company like Lemonade not have the fundamentally lower costs than sort of the internet and SaaS business model would imply? Is that fundamentally what's going on here?
Say that first part again.
You would think that a company that doesn't have sales reps and infrastructure in the same way that like a State Farm would
right.
Be
they're
able
not
to
they're not
have
paying
lower
agents a commission, a big chunk. Right.
Yes. So do they just not have the lower costs that you would think with an internet-based business, or is there something else going on?
So really what it gets down to is their ability to underwrite insurance, right? When yes, they're growing. Yes, they're spending a lot of money. They're not sure if it's in the letter or not. I'm trying to get down to the bottom of it to see. So their operating expense increased from $82 million to $110 million in the quarter, right? To a certain extent, that's expected because they are. I mean, when you have 30% more customers, and you are going to spend more money. The fact that they just acquired Metro Mile, right? So they're looking to offer auto insurance, and I think that added like 48 or 49 states that they are licensed to have auto insurance in. You have to have experts and the right people to manage the regulatory regime of all of these states. So of course they need to be spending more money on operations for people for stuff like that, right? Until you get to a certain level of scale. So the challenge seems to be as they're adding that expense. But again, to me, it gets back to that gross loss ratio. It is when you say you need to be in the 70s and you've been consistently closer to the 90s for the better part of a year, you're apparently just not really good at charging the high enough premium. I'm sorry, that's what it sounds like to me, and that's what I continue to have a frustration with. The management has also said that of course they're going to say this, but you to a certain extent you have to take some things at face value. And management says in the prior earnings calls, the policies that we wrote in the current quarter, we expect will have loss ratios, profitability ratios in line with our long-term goals. Okay. So you say that at the beginning of the year,
and then it doesn't happen.
We're in the third quarter and we're not seeing it, right? These policies are for a year. So it's a little frustrating, I guess is what I'm saying, because so many things about their business model I admire deeply. The ability to go on their website and to get approval for a policy or not in minutes is fantastic. That's great. That's a great experience. Let's say you have a renter's policy and your laptop gets stolen. To go online and file a claim and get your money in like 2 minutes, that's bananas, right? That level of extreme customer service and a positive experience with an insurance company is amazing.
Yeah.
But if you're doing all of these things and you can't get any kind of a premium on the premium for that, it's just, I'm beginning to lose. I really am beginning to lose conviction in their ability to. I've given these guys the benefit of the doubt for over a year. I love what they're trying to do. You just got to be a good insurance company too.
Yeah, we've got about 15 minutes left. Final thoughts on Lemonade. Again, this is another one that I simply put in the too hard pile / the prove it to me pile. I agree. Yeah. I like what they're doing. I like the theory. I like taking, we started with physical insurance agents in little offices, and then we moved to Progressive and Geico and companies like that. And this is sort of the next leg of that, but you got to prove that you can actually make it work financially.
Yeah, that's exactly right. That's fair. And, again, kind of like with Upstart, another great idea, interesting technology, burning through tons of money because we haven't demonstrated our product is superior. I think it's kind of the same thing with Lemonade. If you can stomach the risk and you taking a small position, I can understand, but I could also understand. And my recommendation to most people would be, let these guys prove it. Let them prove it. Right.